All right, so welcome back to the second half of the certification test prep questions here. So we're going to go over the highlighted portions that we did not have time to go over or chapters we haven't covered yet. So this time we went through every single chapter in the book. Okay, chapter 15, chapter 16 is extra practice. So here's a quick reminder that the certification test prep questions is approximately 50 questions. It's actually exactly 47. Okay, they did change it, so it's exactly 47. And you have exactly 50 minutes to complete the exam. Okay, unless you have some kind of documentation that you want to request for accommodations. Okay, which can include extended time. But for most cases, right, if you do that, you have to be careful because it sometimes takes a while to for you to get approved for those accommodations. But for most cases, right, it's going to be 50 minutes for the entire exam. And honestly, if you know the question and you know the answer, you don't need more than a minute to answer the question, right? It might only take 10 seconds to just click and press next. So in this case, if you know the answer, you should be fine. It's a plenty enough time, okay? Now, other than that, it's going to be 1/3 of it's going to be navigation. So that means it's going to ask you questions such as fill in the blank, click and drag the appropriate boxes, put the steps in order, okay? And then the 2/3 is just going to be random multiple choice questions that you just have to answer, okay? At the end of the day, there is nothing that you have to type in there. It's a lot. It's just more like clicking the correct answers, okay? All right. Okay, so let's see where it's okay. So the first thing that we skipped was this section right here, which is chapter 14, adjustments. So we just covered this yesterday, right? So this one asks how to keep the lists, customers, vendors, items, and preferences from an old file while deleting all old transactions. Okay, what was that feature called?
Condensing?
Condensing. Good. Condensed data. That's correct. So in this case, condensing the data. Actually, I don't want that. Condensing the data will. There we go. Condensing the data will, in fact, allow you to reuse that same file over and over and over again. And it allows you to basically start fresh, but not all the way fresh, right? Because it's still going to keep your customers. It's going to keep all the preferences that you set up because we've already seen the process to set up QuickBooks. It's not an easy task. So instead of having to start all over by creating a new file, they allow you to use the old file, right, with all the settings that you put on there, but you can delete all the transactions so you don't clutter yourself. And when you close out the close out the accounting period, you're going to make a backup file to make a copy of it, of course, first before you condense and delete all those transactions, okay? So it is called condense data. How do I do that? How do I condense my data?
There's a utility called a cleanup data file.
Okay, so I'm asking a navigation question. So how do I do that on QuickBooks? There's only one way to do this. How do I actually condense a data file? So you're on the right track, May. But how do I initiate this condensed data? How do I actually do it? Anybody want to just give a lucky guess?
It said condense data command from utility submenu under the file menu.
Under the file menu.
Go to the utility submenu.
Utilities.
And then there should be the condensed data.
Good. All right, so there you go. So that is the answer. How do I do that? It's under the file menu. You're going to click on utilities. And then, oops, where am I? Okay, now remember, you can condense data based on a specified time frame. So it doesn't mean it's going to just delete everything that you just put in there, right? You can set parameters to select the times that you want to delete the transactions, okay? So that's what's really cool about that. Make sure you kind of are aware of that. Okay, let's see. We went over all of this. Okay. All right. Let's see. QuickBooks list management. We've already went through a lot of that already. All right. Next section here is going to be items, which is going to be 8% of your exam, which is going to be approximately 4 questions. Okay. A student should know. Number 1, so chapter 8, right? We learned about items and inventory. So first question is going to be, how QuickBooks uses items to perform the necessary accounting entries. So, what are items used for? Can anybody tell me what items are used for?
Items are kind of the I don't want to use the wrong word, but anyway, it's the specific thing that you're doing or selling or purchasing, or it's the specific thing. I can't think of what the word they
You hit the correct word, selling. Okay, so in this case, items are used for the sales process, right? So if you're trying to sell a product, you have to put an inventory item because that's part of your inventory, right? Under those items, you can list out what taxes that you're going to be charging your customers at. You can also list out your discounts that you're going to give your customers. You can also add or tack on other charges such as shipping, right? So this items is primarily used for the sales process. The only exception to that rule is that you can also use but you can only use one. You can only use the inventory part item to purchase those items, okay? You can't use a discount item to buy inventory now, can you? So that's the only exception to the rules, that just the inventory parts, you can use it for the purchasing part. But you can't use any of those items for purchasing in general, right? So in this case, you hit the definition on point, right? It's used for the sales process. Okay? And I'm going to go ahead and put right here, only inventory parts or non-inventory parts, right? You can't purchase services. Can be used to make purchases of inventory, right? All right, now how do we initiate or how do we use items? How do we actually use our items?
We use them in our bills and our receipts and everything to list what it is that was sold.
Okay, not bills.
Well,
But you did hit the right one, right? You use it on our receipt. So any you select items that you put on any sales forms. Okay? So whether that is a you know, an estimate, right? So you could do it on estimates, sales orders, right? Invoices or sales receipts. Okay, those are the only sales forms that you can utilize them on. Okay, now for like again, this applies only for inventory parts. Those are the only things that you can bill for, right? Because that's the only item that you can use to be able to purchase inventory for, right? And obviously you're buying your inventory from a vendor, right, or a supplier. In this case, you would not be able to put a sales tax item on a bill, right? Because they're going to charge you tax. And if they do, right, that's just going to be considered something that you have to link in an account or an expense to, okay? But not necessarily anything else, okay? All right, there you go. Next, okay, the different types of items, okay, and what they are used for each type, okay? So in this case, you need to go on to that list. I don't know what page it is on, but it's on it's right under in chapter 8 under the big huge title items, okay? And there should be a list of 11 item types, okay? So they are service, inventory part, non-inventory parts. Okay, you got inventory assembly. Okay, you got other charges. Okay, you got other charges, you got payments, you have subtotal. Okay, you got discounts, you have sales tax, right? Both item and group, and you have group. Okay, so make sure you know the ins and outs of every single one, because you will be tested on knowing the difference between them and categorizing. So they'll give you a sample, an example, right, where they'll give you a bunch of products and items, right, and they're going to tell you you need to match what these items and how you're going to plug it into QuickBooks, okay? So again, you need to know the ins and outs and how to use those items and be able to categorize what those products could be used for, those items, okay? Okay, next is when to use items for different types of scenarios, okay? And these include companies that sell, so here, a product at a specific price. Okay, so this one's straightforward, right? What kind of item would you use for products that are sold at a specific price? What kind of item would you use for selling a product at a specific price?
Inventory or non-inventory? Oh, inventory part.
Yep, inventory or non-inventory parts. Good. Okay. What about services that are set for a specific price? What kind of item would you use?
Service item.
Yep, that one's straightforward, right? You provide a service, it's going to be a service item. What about a unique product or service that have different prices for each sale? Right? The key word here is unique product.
Other charges item.
No, other charges is in case you have shipping. Okay, right? You charge for other things that are part of the sale. Keyword, unique product. Think about a bakery, right? Isn't their products unique?
Yes.
Okay. So if they're trying to sell you a unique product, what kind of item would you use? Okay, so I gave you a bakery, so that means they can have a combination of inventory parts and non-inventory parts, such as eggs, milk, flour, sugar.
Oh, the
Inventory assembly, yes. Inventory assembly is when you build your own product. Hence the unique product, right? Does every single bakery, do they sell the same exact cake? Think about donuts even. Dunkin' Donuts, Krispy Kreme donuts. Do they sell the same exact donut? Yes, question. No question?
No, it was Miss Marcy. She said she's having screen troubles and she'll be back.
Oh, okay. Thank you. So in this case, right, like I just mentioned, Krispy Kreme donuts, right? The Dunkin' Donuts store, or any small mom and pop donut shop, right? Do they make the same exact donut? Every single one of them can make a plain glazed donut, but can you tell me this? Does it taste the same? Can you say that they're making the same exact donut? No, some of them might add salt to them. Some of them might add some kind of special ingredient that makes them unique. All right? All right? You can do a taste test, but at the end of the day, they're all going to be the same donut, but they all have something unique about it. So in this case, creating a unique product, most likely, right, is not going there. It's gonna make them stand out and differentiate from each store. So that's what makes it unique, is the product that they sell. Okay? And then last but not least, what about a one service or product? So in this case, straightforward, right? It could be inventory or service, right? Or it could be non-inventory, right? Because it's one of those products. All right, so we went over sales. Let's see what, okay, so here, chapter 5, okay, under other bank transactions, the question asks is how to handle bounce checks. How do you handle a bounce check? How do you handle a bounce check?
You enter a NSF transaction
Where would you do that?
in the banking account.
Not the banking account. How do I initiate that my customer has written or gave me a bounce check? So in this case, we're looking in terms of the customer, because that's how you handle a bounce check, is when a customer gives you a faulty check. They gave you the NSF check. How would you go about handling that?
We open the receipt.
Go ahead. Open what?
Open the receive payment windows,
Okay.
and then there is a button on the top
Mm-hmm.
that says record bounce to check.
Good. So you're going to open received payments. Well, obviously, you need to make sure that you select the correct person, of course.
Yes.
And then at the top of the window, select record bounced check. Good. And okay, that's if, again, I'm going to put this in parentheses. Customer gives you a faulty check. Okay. Now, if you want to answer the question, what happens if you write that faulty check? If you write an NSF check, okay, then you can fill in that section yourself. Okay, because in this case, there's under that chapter, there's a small section where it gives you the recommendations on what you need to do if you are the one who writes the faulty check. Okay. Let's see what's next. Okay. Oop, this big, huge section right here, right? Chapter 8, items and inventory, okay? How to create a sales tax item. Okay? How would you create a sales tax item? Okay? How would you create a sales tax item?
It said select sales tax item from the
There's
type.
there's a specific place that I have to go to first before I can do that.
Isn't it in the items list?
Items list, good, right? You need to get to the items list first. And then once you do that, there's that other small step before you select the item type. What do you have to do? How do I get to that window? So you got to the first part, you got to the items list.
You have to click new.
Say that again?
What items and services?
Okay, so items and services, because if you click that on the home page, it will take you to the items list.
It's item list and then list menu. Oh, go to the list menu and choose item list and then the item button and then choose new.
There you go. You need to create the new item for you to get to that window that you're talking about, May. So that's why navigation is very key, right? You can't just say select sales tax item. Well, how do you get there? How do you get to that window? You first need to get to the items list, right? And then you need to create a new item by going down either you could go down to the left bottom, clicking that item drop up menu, and then selecting new, or you can right click anywhere on that items list and click new, right? So you have to create a new item. So I'm just gonna do the right click one. Make sure you know the other one as well. Right click new, okay, and then and then select sales tax item under item type list. Okay. Now, what is the difference between a sales tax item versus a sales tax group?
So sales tax item is an individual sales tax, and then sales tax group is a group of those individual sales tax.
Okay, so why would you group them though?
Because, for example, in Clark County, there's two different kind of sales tax that we get charged. So we group them together so that when we buy something, we are charged as one tax, but in reality, it actually goes to two different sales tax kind.
Sales tax what?
Kind
What
or
do you?
items, I should say in this case.
Okay, no. You were very close, but you said kind, and no, that's wrong. It goes to two different agencies. Yes. Okay, there you go. So sales tax items, you use if you pay only one agency. Okay. Okay, or in this case, sales tax agency. Okay. And then sales tax group is use if you pay more than one agency. Now, why would you pay more than one agency? What is the breakdown of sales tax? What does it consist of?
Well, you've got city, county, and federal.
Not federal. Sales tax is not federal.
So you've got a difference by the state and by
Yes.
the county.
Yes. State tax and county or city. Okay? That's what you need to know. That the sales tax is a portion of it goes to the actual state, and the portion of it actually goes to the city or county that you are doing business in. Okay? So again, San Jose is a city, right? They're obviously gonna charge a different sales tax rate than it is in San Francisco, right? Even though they're the same state, they're different cities or different counties. Okay, so of course the 100% they're gonna charge different tax rates because of the city or county that they're doing business in, even though they're in the same state. Okay, so you have to know that sales tax is based off of the state plus the city and county that you're doing business in. Okay, good. All right, how to complete the inventory workflow. So starting with the first one, right? Making a purchase order. Okay, what does a purchase order do? It's a straightforward question.
It's your order to have something that you're buying from your vendors.
Good. So in this case, use it to order items. Okay. Now, in this case, right, what does purchase orders affect your accounts? Do purchase orders affect your accounts? No. So that's something you need to know because that could be on your exam. Purchase orders are non-posting transactions. Okay, so you need to know what that means. Meaning they do not affect any accounts. Okay, because this is just a request to order items. No real transaction is taking place. Meaning, right? Meaning, did you receive the items? Did you receive the items? Did you receive a bill? Okay. That's the questions you're going to ask yourself to determine why this purchase order, right? All you do is simply, you're just ordering them, right? There's no real transaction going on because you did not get billed. You did not receive your items. So in this case, that's why it's non-posting. Now, what happens when you receive your items? Okay, so there's receiving items with the bill, and then one of them is without a bill. Okay, so if I receive my items, I hit the wrong one. So you're going to be receiving the inventory, right? You either have the option with a bill or without a bill. So let's talk about with the bill. What happens when you receive items with the bill?
Well, you got to enter the bill so that you can pay it.
Exactly, right? It simply just takes you to enter bills window. Okay? Now, what happens when you receive items without the bill? What do you have to fill out instead? It's a specific form. What do we call that form?
It's item less fee.
Item receipts. Good. So in this case, when you receive items without a bill, you're going to fill out an item receipt. Okay? So in this case, an item receipt could be more or less a shipping slip, okay? Or they call it a packaging slip, okay? Where they let you know that you are going to receive one shipment out of 2 shipments, okay? So in this case, you're not going to be receiving the whole bill because what the vendor is saying is, what if I never ship you out all of your items, okay? Then, or what if I'm on backstock? I can only charge you for what I ship out to you. So in this case, if you're pending and you're waiting for the other half of the shipment or a third of the other shipment, then the company cannot charge you until the order is fulfilled. Unless it's been way too long wait, you call up the vendor and say, just only charge me and send me a bill for what you've shipped out to me. And then you can cancel the rest of the order. Yes, you can. You have to do just a little communication. And so then they can send you the proper bill with the correct amount of items that they sent you. Because if they send you a bill of saying we're going to bill you for 100 items, but you only receive 25 of them, is that correct on their end? Can they charge you 100 items when you only receive 25? No, right? Because you probably would be so angry saying, why am I paying for all of this inventory when I haven't received all of them yet? Okay? So that's why usually this is rule of thumb. They will only send you the bill after they shipped the last shipment. Okay? Okay, so then once you've done that, it's going to be a shipping slip or a packaging slip, whatever it's called, right? Now, what happens when you received all of your items, right? And you have a whole bunch of items receipts. What do you need to do? You received all your items, and now you have a whole bunch of item receipts. What do you do next?
Then we click that square it so that it turns the item receipt into a bill.
That's one option. But there's a function to it. What do we call that? Okay, check out your home page. Okay, if I received my items, right? What's the next step? What's the next step?
Enter bill against the inventory.
I have to enter the bills against inventory. So that's what the next step is. So after receiving all items and recording the items, receipts, you must enter bill against inventory, right? And what does this essentially do, right? Inventory, which what it does is it converts item receipts into bills. Okay. Now remember the rule of thumb here, right? You can only convert one item receipt at a time. Okay, so you can't just tack a whole bunch of item receipts into one bill, right? You can only convert one item receipt into a bill at the same time. So even if you do end up receiving a bill and it has all the information, you're just going to have to enter it in so you know that is all one bill. And obviously you're going to be using the reference number so you know this is part 1 and part 2, right? You have to just do that on your own. You cannot convert multiple item receipts into one bill, okay? So remember, only convert one item receipt at a time, okay? And then what about recording the bill? That's straightforward, right? That's exactly what this is, where you enter it with the bill. You just immediately record the bill, okay? So I'm going to delete that because we already answered that question, okay? How and why to create or use group items. What's the purpose of group items? what is the purpose of group items? Why would you use group items?
To bundle your products.
Good. To bundle products, right? Meaning you're just literally putting one product with another product together and you sell them as a bundle package. Okay? Good. To bundle products together to sell as a package. Good. Now, the how is straightforward, right? You just create the group item. Now, in this case, when you are going to do this, right? The how, okay? You must enter each individual product into the items list first before creating group items. Okay, because in order for you to create the group item, what you do is you name it first, and then you're going to be selecting all the individual groups to create the bundle package. Okay, so it's not like you can just create them out of thin air. Okay, you have to have them exist as their individual pieces, and then you use the group to select those pieces and combine them into a package. Okay, now what about how to use inventory assemblies? How would you use inventory assemblies?
Well, that's like if you're putting together a certain thing and you've got parts that come from different places, that way it's all, you can say, I use this package and this package and this package to put together this creation.
Yes, good. So again, the bakery items, right? I can use eggs, flour, sugar, and milk, right? And flour, right? And all of those going to be existing as their own items itself, right? Whether it's inventory part or non-inventory part, it doesn't matter. Because when you're doing a inventory assembly, what you're doing is you're taking all of those inventory items and you're combining them to create a unique product. Okay? So that's how you use inventory assemblies it is similar to group items, except you are combining items to create a new product. Okay? Now, what's the rule on this one? Because if you create an inventory assembly, right, that is just creating the instructions, right? So you need to know that creating an inventory assembly item is only creating a recipe or instructions, right? What is the next step after you created that item? What is the next step that you have to do? How do you actually create the product? Because this is just a recipe, it's just instructions. How do I actually make the product?
Don't you have to create it as its individual item so that you can just pull it up as the item that's been created and it will put everything into, do you know what I'm saying?
I get what you're saying, but what do you call that? How do you make the product?
You hire somebody to do it for you.
No. How? Okay. Even if you do that, right? Okay, I hire somebody to make the product for me, right? How do I record that in my QuickBooks that I made this product? Okay, so again, this was in chapter 8. What did I do? After I created the recipe, the instructions, what do I need to do? How do I make the product? Okay. All right. How do I make the product? Well, let's take a look, right? If I go to my, let me see. If I go to my vendors, okay, and I go to inventory activities.
You have to build the assembly.
I have to build the assembly. Yes, I have to actually assemble it, okay? That's what I was trying to get at. That's how you make the product and it gets recorded in your book. So just because you have the item, that's only the set of instructions. You need to go and build the assembly for you to actually create the product. It's not going to be up here just because you said, I'm going to make eggs and flour and sugar. I'm going to put it in a list, right? You need to actually physically create it. And you do that by building the assembly. So build assembly. Okay. Now, of course, when you do the build assembly, you have to know that you're going to have to make sure that you have enough inventory first. You need to make sure that you have all the enough items in order for you to build your recipe, right? You need to know that, right? It's just like baking, right? You need to have all the ingredients before you can go ahead and build your product, right? If you need 2 eggs, right? What if I don't have any eggs? Well, then I got to go buy a dozen eggs. But if I buy a dozen eggs, how many cakes can I make? Well, I can make 6 cakes. But that means I have to get 6 times all the other ingredients for me to be able to make 6 cakes. But if I only have 2 eggs, or if I have 12 eggs, but only 1 cup of milk and 1 cup of flour, then I guess I can't make my cake. I only have enough ingredients to make 1. So that is the essential part of building assemblies. Is you also need to make sure you have enough items in your inventory to create the product. Okay, so you guys can put that in yourself. Okay, how do you use units of measure? What is units of measure?
We can buy items in a box that has multiple unit in it, but when we sell it, we actually selling that individual product in the box.
Excellent, right? So that could be why you would use it, right? If we buy in bulk, / package, right? We can sell it to customers at as individual pieces, right? So if you buy in bulk, right, you can sell it as separate units, pieces or units. Okay, and how would you use the units of measure, right? Well, what is the item? What if you're gonna buy it in bulk, right? How would you describe each and every individual piece, right? Right? Is it each? Is it a part? Is it a unit? Is it a bag, right? So in this case, you need you need to determine how you would describe or quantify the product you are selling, right? So each piece, bag, part, okay? All right, so let's see what's next. Okay, this one right here, Chapter 5, Bank Reconciliation. How do you do a bank reconciliation? Okay, so this is Chapter 5. How would you do a bank reconciliation? What are the necessary steps that you have to take in order to complete a bank reconciliation?
First, you got to have the bank statement from the bank.
Yes, okay, so I'm going to put step 1. You need a bank statement. Okay, what else? So once you receive your bank statement, what happens next? Okay, so once you have your bank statement, right? How do I start my reconciliation in QuickBooks?
You go to
Select
bank
reconcile
menu.
under the banking
Yeah,
menu.
you have to go to banking menu.
Correct. Select reconcile icon on home page under banking section. Okay, good. Once you get to that window, what happens? What do you need to enter in first?
The account you are reconciling.
Good. You're going to select which account you're reconciling. Most cases, it's going to be your checking account. What's after that?
You need to read off the information of the bank statement, like bank charges, the interest we earned, the beginning balance.
Okay, the beginning balance, and what else do you need?
Ending balance.
You need the ending balance because that is how you're going to reconcile your bank. That's how you're going to do a bank reconciliation. Is that at the end of comparing your bank statement to your actual checking account? Is at the end it must equal to the ending balance that is written in your bank statement. Okay, so that's the most important thing, is that you need to enter in the ending balance, okay? Because that's the number you are trying to match your bank statement with, okay? So step 3 is to select which account you are reconciling, okay? Then step 4, you need to enter in ending balance, okay, found on your bank statement, okay? Then the next step is you need to, right, just you're going to enter
Service and interest.
any service charges and interest income. Okay. And then step 6, what do you do once you enter it in? Okay, so for example, I'll just say I have 5,000. Okay. Oh, that's too much. Okay. And I said no charges. So then when I click on continue, okay. Oh, my bad. So this is the window. This is the window what happens when you enter something in past the date. Okay. So the password. What was it? A, B, C, D, 1, 2, 3, 4, exclamation point. Okay, so once you do that, what do you need to do next? What are you doing with the bank statement, and what are you doing here in your checking account?
You put, you check hide the transactions from the last app, so that you've got just the ones that you're working with for that statement. Anything that is not on that statement yet, you need to hide that, so you're just working with that.
So,
And then you go to your deposits.
okay, so that right there is optional. That's just to help you clarify or, take out the clutter. So that's not necessarily a step you have to take. It's optional. Okay, but then the next one is what do you do with the deposits?
You match them.
You match them. What's the purpose of matching your deposits? What does that tell you?
Whether you've missed any in your account or they've missed any in theirs.
Who are we comparing our books to?
The bank.
So who would be right in this case?
Well, they would, because they've got the money.
Correct. So in this case, right, we are comparing our books to the bank, right? So if I put in a deposit and it has not cleared yet because the bank hasn't received it yet, that means those are deposits in transits, meaning we may have deposited, but it didn't show up on our statement because maybe it was a weekend. Maybe it was the end of the month. So it's not going to clear till the next month anyway. Or it's that process where I put it in at Friday at 6 o'clock. So therefore the bank's already closed. So it won't process until Monday. So we call that deposits in transit, okay? Meaning the money is deposited, but it's still floating there because it did not clear. So that's the purpose of comparing our books, is we're ensuring that the transaction has cleared, okay? Remember, we may write all the checks in the world, but at the end of the day, how do we know it's cleared? The other person has to deposit into their bank. But remember, what does a check have? A check has a 6-month holding period. That means if I go ahead and write a check to my friend, they could deposit 6 months later because that's the holding period of that check. So I can look at my bank statement and keep seeing, why hasn't this person deposited the money in their checking account? Because they're holding on to it. So that is one of the important things, is that your books will never be accurate, because just because you write all the checks in the world, at the end of the day, it's whoever you're writing that check out to has to do their job to deposit that money into their checking account for it to pull out from your checking account. So in this case, that's also one of the dangers of, doing business as well, is because if you have those individuals who just never deposit their checks at all, right? Because some businesses, they might hold off and wait till the end of the week to deposit, right? They just want to gather all the money and then just deposit all in one day instead of doing it every single time they receive a check, right? Some of them can even hold it till the end of the month. All right? So that's why what's going to be accurate is going to be whatever the bank statement says to you. Now, it's very rare that the bank will make a mistake because, bank, when you go to the bank teller, they're humans too, entering the transactions for you. So you can't always you can't necessarily blame the bank because again, it's the person who did that for you. But at the end of the day, the bank statement would hold itself way higher than yourself. Okay, so in this case, that's what you're doing when you do a bank reconciliation is you're comparing um, outstanding checks and deposits in transit, okay, and seeing which ones have cleared on the bank statement, okay? And then, of course, what's the end goal? What is the end goal that you have to ensure that your bank reconciliation is complete or accurate?
The difference field has to say 0.
Yes, difference field on reconciliation window must be 0. Good. All right. Okay, so let's see. Next section here. So let me go ahead. Next section here is going to be payroll. Okay, let's take a look at payroll. Okay. So it's going to be 12% of the exam, which is approximately 6 questions. So again, payroll is one of the largest sections. Okay, to be honest, I don't exactly know why it is the most questions on the exam. Right? Because again, it's not the most important one because if you're trying to do a business, your most important one would be your sales, right? But in this case, the test really wants you to focus primarily on payroll because it's a huge chunk of the exam, okay? So starting with the first one, so chapter 10, which is the payroll setup. Number 1 says the difference between the payroll services available from QuickBooks. So in this case, what were the 3 different payroll services that Intuit offers?
It's basic, enhanced, and assisted.
Yeah, so basic, enhanced, and assisted. Okay? Now again, try to understand just the very basic idea of what each one can do. So again, I'm not going to list it out just because you'll be able to find the answer by clicking on more information about the payroll services. Okay, basic again only allows you to just pay your employees and pay liabilities for a small group of individuals. Okay, enhanced and assisted again will be larger groups of individuals, and then also the enhanced and the assisted allows you to also file your forms to help you file the forms, but it also helps you submit them to the IRS. Okay, so just make sure you know the important details, the important features of each one. Okay. How to set up payroll using the payroll setup interview. Okay, so again, setting up compensations, benefits, and deductions. Okay, you need to know how to do that. You need to know how to set up your employees, and you need to know how to set up your federal and state taxes. And of course, you also need to know how to set up sick and vacation time, and also you need to know how to set and track sick or vacation time. Okay, so in this case, right, compensations, okay, are going to be dealing with how you're going to pay your employees, okay? How how are you going, or I guess how you pay your employees, right? Are they hourly? Are they salary? Are they based on commissions? Are they based on tips? Do they only receive bonuses? Okay. How are you going to pay them? Okay. Benefits. Benefits. What benefits do you offer them? Do you offer them medical insurance? Okay. Do you offer them vision, dental, life insurance, or even retirement plans? Okay. Those are considered benefits. Okay. AKA a 401k. Okay. Any deductions are going to be things that are either going towards something or they take away from your paycheck. Okay. So those things can't, well, again, a 401k is also a benefit and a deduction, because not only are you benefiting from the company, but at the same time, you have to pay into that. Okay. So what are those deductions? Deductions could be any fringe benefits that you have to pay for, right? Okay. Anything that else you have to pay for, such as meals, okay? Meals, travel, okay? Mileage, right? That's a deduction because you may have to pay first and then they can't reimburse it on your paycheck, right? So in this case, those are going to be some deductions that are possible to be written off of your things. Okay, next. How to set up employees. Well, first off, what are the important things that documentations you need to set up an employee? You need to have, okay, if you require them to be a U.S. citizen, you need a birth certificate, or what is it? Certificate of naturalization, I believe it's called. Okay. Or if you allow non-citizens to work, they need to show proof that they have a work visa, or they have a temporary social security number that allows them to work in the United States. Okay. You need to have their social security number, right? So you can identify them. Social security. You need to have a valid state identification identification card, or a license. Okay, driver license, right? And then of course, important thing is you need to have their W-4 forms, because they need to tell you what they can withhold taxes from you. Okay, so to withhold taxes. Okay, and I'm going to say federal and state. Okay, and that's just the primary one. Oh, then of course you also need, of course, you know, you need to make sure that they have a residential address, okay? Because that's going to determine which state are you going to be taxing them at, okay? So these are very important, okay? What about setting up federal and state taxes? That one's going to be straightforward, right? What are the mandated federal taxes that you are subject to pay to? So federal income tax withholdings, FICA, so the Federal Insurance Contribution Act, right? And then state will depend on what state that you're doing business in. So again, if you're in the state of Nevada, there are no state taxes. Okay, and then of course you also have to set up the companies. Okay, so you have to set up employee, okay, which is FITW, FICA, and then you also have to set up companies as well. So we got the FUTA, the Federal Unemployment. You have SUTA, the state unemployment, right? And anything additional. So you also have to match the FICA as well. Okay, so you have to be able to set up all of those with the correct accounts and agencies that you're going to make payments to. Okay, and then how to set up vacation and sick pay. Again, this is extra. This is additional. Additional benefits slash deductions, right? If you offer vacation and sick time, right, you need to know how to set that up, right? And how to set your parameters on when it's going to renew, whether it's every year, every paycheck, doesn't matter. And then, of course, you also need to determine how you're going to keep track of that. So you can keep track of that by using the enter time sheets or on the pay employee window. You can select the payroll item and designate the number of hours. Okay, straightforward. Okay, how and why to set payroll schedulers. Okay, what is a payroll schedule, and what and how do you need to use it, or how do you set it up? Okay, so let's talk about what a payroll scheduler does. What does it do?
A payroll schedule sets up a reminder, or rather a calendar events if you're gonna be paying weekly or monthly or bi-monthly.
Okay, good, right? And what else does it also do when you actually set those payroll schedulers? You can actually designate the exact date of when the paycheck is going to be either created or when it's going to be when it's time to pay your employees, right? You could designate the exact date. So then it's automated for you. Okay, so good. So that is to set up pay frequencies, okay, and put dates of when to pay to remind to pay employees. Okay, so again, you can set it up as bi-weekly. Okay, you could do it semi-monthly. Okay, or you can also do weekly, daily, all of those. Okay. All right, and then how do I set that up? Straightforward, right? You locate it under the employee defaults. Okay, so employee defaults. Okay, then you're gonna select pay scheduler. Okay, and create a new pay schedule. And assign the next paycheck date. Okay. All right, so what I'm going to do is I'm going to stop here for now. We're just going to go on a quick 15-minute break. So exactly right now it is 3 o'clock, okay? So let's take our 15-minute